You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's blog gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/blogs today to sign up for regular updates via email. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. A lot of great content hitting the network for you this week. Some great interviews, talking about some good, fun, charitable causes hitting up. You don't get to talk about that often on the network. So those hitting the network this week, some advisors option, a whole bunch of news, a whole bunch of fun stuff for you guys to enjoy. If you want all that, not just Vol Views, go ahead and to whatever your platform of choice may be, iTunes, Google Play, Stitcher, we're not on SoundCloud. Maybe we should get up there. That's the one probably we're not on. That's just a whole separate system. We haven't wanted to go down that road. But c'est la vie, wherever you want to find your favorite podcast programs, you should be there. Subscribe to the full network, and you get the whole kit and caboodle every one of our 15 shows. There's a lot of content, but if you're up for it, have fun. And of course, you can always hit up the website to find it all there as well as a lot of our written content and all the other fun stuff we put up there. And also follow us, social media, all that fun stuff. And if you are so inclined, you can join us live every Friday, noon Central, 1 p.m. Eastern via Mixlr, MIXLR. We tweet out that link and put it in our newsletter and everything else every week. So if you don't have it for some reason, you can get it and grab it. And if you're around on Fridays at noon, we'd love to see you, love to hear from you in there as well. However you listen live after the fact, do hit us up. Questions, comments, insights, pearls of wisdom. You guys are the soul of the show at the end of the day. So if you'd like to hear what you're thinking about, what you're trading, what you're doing, what you're up to, let us know. We do love to hear from you guys. And joining me on the show today, let's start off in order of proximity. I know where one of these guys is because he showed up in the studio today. How fun is that? He's on sabbatical, but he's still here talking all things VIX, all things vol. The soon-to-be Dr. VIX, once he finishes his dissertation, Mr. Russell Rhodes. I'm just going to call you Man About Town over there at CBOE. Is that on your business card now?
That's. We're still working on a new title. I just, as long as it has the word strategist in it, I could care less.
Quite literally, you are all around the town right now. So you are a man about town. So that is an apt title, I do believe.
I'll be lurking around the shoe sale at Nordstrom Rack a little bit later today
yes,
as well.
There you
I'm
go.
all over the place. One last thing with respect. There are two things that have to be done for me to be Dr. VIX. One, I got to finish the dissertation. The other, I have to dress as closely as possible to Dr. Detroit as I can.
I thought you were going to say Dr. Evil.
No, Dr. Detroit. That's the old school, our generation.
That's super old school. You're going back a few. You're going to ride a bomb as well. That's Dr. Strange. We'll take it all. We'll take it.
No, Dr. Detroit.
All right, and also joining us from parts unknown, maybe a bunker in Iowa, perhaps the heart of London, perhaps just down the street. We never know. It is the Greasy Meatball himself, Mr. Mark Sebastian, coming to us from Carmen Line Capital by way of OptionPit.com. Mr. Meatball, where are you today? Perhaps, shall we say, the Cabinet War Rooms in London? That's going to be my guess.
No. I'm actually at my overseas client advising on some VIX hedging, on a small VIX hedging strategy that we just got up. So no kidding. I'm in Chicago at the Option Pit / Carmen Line Capital World headquarters on famous and historic LaSalle Street. Good to be here, and surprisingly, with a 9.5 VIX, we have a lot to talk about today, and I'm excited for it.
Yeah, some stuff's actually popping off, so let's get to it. It's time for the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review. Like the man said, this is the portion of the show where we do just that. We review the volatility from the week that was ongoing and currently is still ongoing throughout the week. We are recording this and indeed streaming it live right around noon Central on Friday, the 21st of July. Hard to believe we're crawling all the way through July, or most of the way through already. And as Mark alluded to, VIX is kind of anemic, but there's still a lot to talk about. But let's start there. That anemic nature of ye old VIX Cash, getting a lot of headlines these days. I'm sure if you've picked up a broad financial media outlet or searched online for any sort of financial information, chances are some sort of headline with the words VIX historic levels. You're seeing that all the time. We are hitting this kind of effectively historic string of single-digit closes for the VIX. I think we're on day 7 right now. I'm sure Mr. Rhodes, he loves all that kind of stuff. He can give us extensive information on exactly how that falls into the historical calendar. Also hit a 24-year low last Friday, I believe, of about 9.5, I believe it was, or was it? Yeah, 9.5 exactly out there in VIX Cash land. So flirting with all sorts of interesting levels, hitting some interesting levels overnight as well. Of course, with all this erosion, we're seeing VVIX also eroding. Last, it was flirting with 100 not that long ago. Now it's back in that lower end of the range, right around in the mid 70s or so, about 76. Coming into today, about 77 right around now. So it tends to bottom out around that 75 level. It seems like when things are kind of quiet, it has a nice kind of bottom of the trough around 75. And it usually, if it spikes, it gets up over 100. Things are actually rocking and rolling. So let's start there. Soon to be someday, Dr. VIX. How tired, and let me ask you this first, how tired are you of people asking you, how does X date, or how does X string of dates, or how does X level of VIX, how does that equate historically over time? What record level are we at today, sir?
VIX is low.
Yes, there we go.
Kind of like Ollie Williams. It's going to rain. VIX is low. We know that.
Do you have a reference from like past 1965 in your
Ollie
Williams
wheelhouse? Still shows up on Family Guy every once in a while. But it's summertime. We're in a low VIX volatility regime. Nobody seems to be worried about anything until we look out to September and October, and we're going to get to that shortly. I think everybody assumes that any major legislation that gets pushed forward is not going to get anywhere until after Labor Day. Maybe back in World War II, we actually only had 2 atomic bombs, and we dropped both of them, and then the Japanese surrendered. They didn't realize we didn't have more of them. I'm starting to wonder if Kim Jong-un, is that the one we've got now?
Yes.
If he has shot everything that he has into the ocean and needs to send somebody on whatever the nuclear missile equivalent of a beer run is to cause more trouble.
Pretty much the definition of being all in when you only have 2 nukes and you use them all. You're all in.
We
at that
did.
point.
No, a lot of people don't realize that. We had 2, and then thank goodness they didn't call our bluff on that. They thought we only had 1. And then we dropped the second one, and they're like, okay, we're done.
Once you try the uranium bomb, you got to try the plutonium. I mean, why not, right? I mean, heck, while we're decimating cities with uranium, we have this plutonium thing. We should use it. I mean, otherwise we don't know if plutonium's as good as uranium. So it's I think I get what you mean.
Aside from weapons of mass destruction, Mark, what was catching your eye from a vol perspective this week? And bear in mind, we'll get into those crazy size VIX trades we're seeing in a little bit.
Well, I mean, it really a slow week from an S&P standpoint, but we did see a little action in the NASDAQ. We saw some of those NASDAQ names move. VXN is still 14.5, so at least there's a bid there. It continues to be higher than Russell Vol. A little bit of movement in bond prices. There is some vol there, and we saw some select sectors move around. I mean, we've got earnings going on, so that's driving some stuff. And then we've got, we saw the Sears Amazon deal cause the Dow to move around. The Dow actually moved more than the S&P this week because Goldman had some earnings that weren't that great and had some other things like that. But on the whole, relatively slow realized volatility in the marketplace, and it brought us a VIX that is also relatively low and is predicting low. One other comment I'd make is that, a lot of the other times where the VIX got below 10, we've seen VVIX catch a little bit of a bid. We've seen vol buyers in the option space for VIX, and we really haven't seen that this time. VVIX has been, consistently under 80 for what appears to be an entire week right now. So I think that's a little interesting as well.
Yeah, there's a lot that's interesting, I think, really to unpack. It's surprising how much there is to unpack, given the fact that the main narrative seems to be, wow, VIX is gone, VIX is eroded, VIX is anemic, there's nothing going on, yet there is some stuff popping off out there. Skew index coming off a little bit as well, which is kind of interesting. People thinking, hey, we're hitting these lofty highs, and it was starting to creep up. It was flirting with 140 around last week. I think got to around 138 or so this week. Coming off quite a bit, about 8 points lower, 130 right around now. So perhaps, if you are a Skew index follower, perhaps indicating something else is afoot out there. Remember, there's two moving parts to that Skew index, the call wing and the put wing, so you can't just assume when you look at that number exactly what's been going on. What is interesting, though, Mark, I know you like a lot of the VIX ETFs and ETNs out there, and we have talked a few times on the show about good old XIV. Pretty much everyone and their mothers, one of their favorite shorting vehicles out there, hitting pretty much, if not a high, pretty close to a high out there, about 93.5, right around there recently. Have you been watching XIV, and what are your hardcores, your crazies in the pit chat thinking about these kind of historic levels it's flirting with out there these days?
Yeah, XIV's good. One of the things, obviously, UVXY had a reverse split, and that makes it particularly fun for us. So it reverse split on the 17th. So now that it's back into the 30s, that's presented some really some funness in the trading of that product. So that's one piece that we're looking for. SVXY, which is also at an all-time, is basically the same thing as XIV, also right at an all-time high, almost $90 a share. Implied volatility, dirt cheap in that name. If one was looking to go short vol, there's all sorts of smart ways to play the options at relatively low implied volatility levels. And that was kind of the approach that we were taking this week. We did multiple different types of kind of bear trades in UVXY that have thus far been all right.
Speaking of extreme things and interesting things, we're seeing some nice extremities to the old VIX futures term structure. We said before, only half jokingly on this show in the past, that the answer to all things volatility comes through the VIX futures term structure, and we're seeing that yet again here today, getting nice and steep, given the fact that we got some new contracts rotating in there, and the cash continues to erode. That always lends that nice little bit of slope to the front portion. Nearly two handles, about 1.8 or so handles between the front month and the cash, and pushing 3 out there for 2 months out, so fairly steep. I don't know, Mr. Dr. VIX. Is this getting to a point here where is this of note to you, concerning to you, or is this kind of just, as you expect, par for the course in this environment where even though the Aug futures are setting kind of new contract lows out there, there's still kind of a floor below which they can't really crush that future. Meanwhile, the cash is kind of free to just plunge willy-nilly. Is this kind of what you'd expect to see in that environment, or is this even a little concerning to you?
It's not concerning to me. Even though the August futures are making new all-time or new contract life of contract lows, and probably new lows, historic lows relative to the front month with this much time left expiration as well. I could probably dig something, not at this very moment, because I don't have all of my equipment in front of me since I'm on site with you today. But I could probably figure out if this is like the lowest the front month future has ever been when we get this close to expiration. The thing is, you got to think about these things relative, and relative to VIX, there's still a nice premium there. You know, if you don't think VIX is going anywhere, you've got the opportunity to almost pull 2 points out of the futures by shorting them. But we know that is fraught with danger. How can you sleep with such a position on?
How dangerous can it be if everyone and their grandmother, literally their grandmother in Iowa, is out there shorting?
Yeah, no grandmothers got hurt in 2008.
Speaking of VIX futures, before we move away, we talked about it a little bit on the show last week. But you have a chance to see I think it was our buddies over there at Typhon tweeting out a cool chart about the VIX futures term structure that they simulated from back in the 87
Oh, that
crash.
was awesome.
That was interesting stuff.
I wish we could retweet things multiple times.
That's true.
That was one of the best things that I've seen in some time.
We'll see if we can do that. Mark, did you see that from your buddies over there at Typhon? It's pretty cool. They did a nice little linear regression of the old VIX futures using VXO to kind of extrapolate what the futures term structure would have looked like back and would have spiked right around 103.80 on October 19th of 87. It had a nice couple of peaks and troughs around there. I think we retweeted it. I'll see if we can maybe pull that image out and tweet it again. I don't want to step on their toes for their images.
You want me to do that?
Yeah, go for it. That's a fun one. That's a fun. Mark Russell's always on the Twitters here, listeners. While we're talking, he's usually got an image or two handy. But that was a fun one. If you haven't checked that out, listeners, I'll put it in the show notes and you can check it out again. But interesting stuff. Mark, anything interesting or maybe alarming to you about this term structure? Or are you kind of like me and Russell? This is kind of like what you'd expect for this time of year and everything else we're seeing out there.
Yeah, I mean, I would expect term structure to be a little stiff with the VIX below 10. But you look at it with 25 days to expire, almost 2 points between the cash and the Aug future, pretty reasonable. There's some decent with vol this low. One can set up some pretty interesting put plays that look, modestly interesting. I'm just kind of getting excited. I think one thing that'll be kind of fun is we're going to start seeing a bid on some Aug 9.5 and maybe even the 9 puts here if VIX stays here for another few days. At some point, maybe next week, I think the futures have another secondary slide in them. August is not a particularly long contract month. There's no Fed. August 4th next week is the
There's Fed tomorrow.
We roll that.
Next week. There's Fed next week.
I thought we had Fed last week.
No,
we had Fed
we had
last
BOJ
week?
and ECB this week. We've got Fed next Wednesday. But we may as well not have Fed.
Correct.
I was going to say, do we really have Fed, even though it's on the calendar?
Yeah.
I think you can just pretty much throw a dart at a week and say we have Fed.
We have the non-Fed Fed next week, and then we've got non-farms the following week. I think by after the Fed tomorrow, or next Wednesday, maybe we take another little mini slide toward 11, and then any below 11 futures tend to move with some slowness to them. But with VVIX this low, you can, if you want to get short the curve, puts are not expensive to own. The 11 puts are 61 vol, the 10.5s are 52. The 10s are a discounted, super cheap 45% volatility. So lots of funness there.
Lots of funness. Speaking of funness, when you think about the funness portion of the show, listeners, you're thinking about Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, listeners, we're going to test Russell's dexterity here. He's middle of tweeting some cool, fun images for you, and now I'm going to throw to him and make him also regale us with at least 15 to 18 minutes worth of in-depth, intricate VIX weekly options activity. Mr. Rhodes, one day Dr. VIX, are you ready to have at it, sir?
What?
Oh, okay. I guess I won't talk.
No, I'm ready. So, lots of I don't want to say sizable trades, not like what we're going to let Mark Sebastian jump on top of in just a second, but lots of decent-sized trades going on in the weeklies. We started out the week. There were some August 9th, August 2nd, and July 26th trades that came in. Somebody bought 400 and lots of nice round numbers here. Somebody bought 471 of the August 9th 20 calls, paid 20 cents. sold 200. This is a different trade. Not a lot of spread trades, a lot of outright trades. Somebody sold 241 of the August 2nd 11 calls for 90 cents. Looking smart so far, I guess. And then there was a buyer of the 16 and the 18 calls almost at the exact same time. It might be a call stupid that's not totally balanced. Somebody bought 150 of the July 26th 16 calls for a dime and bought 200 of the July 26th 18 calls for a nickel. Tuesday, only trade I could really come across, and I'm really hoping this was an exit, not an enter trade. Somebody sold a bunch of the July 26th 18 calls for a nickel.
What could happen? What could go wrong with that trade, sir? Nothing. It's a nickel in your pocket. Go out and spend it forthwith.
Yeah, well, it's like $5 times. I think this was done 1,800 times. So, that's Mark Sebastian's bar tab. So nothing really good on Wednesday. Oh yeah, there was a good one on Wednesday. Somebody bought, going out to August 23rd, somebody bought 100 of the 10 strike calls and paid $225 for them. That's almost like I often refer to buying a deep in the money call like that. It's kind of like a future substitute using options.
Yeah, I'm trying to
don't
think,
have a lot of time value.
As you say that, we see those kind of underlying replacements, in a lot of other type of indices. I'm trying to remember, we don't see a lot of that in VIX for obviously a variety of reasons. So that's, I think, noteworthy in and of itself. I'm trying to think the last time I saw a size trade like that go up, and I can't recall one off the top of my head. So that's interesting and perhaps worthy of note in and of themselves.
I encourage that. I actually encourage using that. We'll just use it. Well, let's just say, and this was actually done without another leg to it, but let's just say that they wanted to do something that's kind of the equivalent to a VIX covered call, which doesn't make a whole lot of sense. But if let's say they buy this thing and VIX gets moving, takes VVIX up with it, and we see VIX at 13 or 14. Why not sell the 13 or 14 calls that got a lot of juice? There's a word we haven't used.
That's what I was going to ask you. That's the way I like to do. If I'm going to do like one of those whatever stock underlying replacement type trades, the covered call component to it is the way I like to do it as well. That makes the most sense to me.
And in order to do it, you really got to basically trade the options instead of the futures.
Our buddy Mr. Overby over there at Trade King, a host of our Option Playbook radio show, he calls that the fig leaf trade for whatever reason. He's explained it to me a couple of times why. I think one of his listeners came up with that, but I still don't understand why buying long term in the money call and then selling some sort of front month or weekly call is a fig leaf. But there you go. That's the VIX fig leaf.
I know why.
Why?
Because when you because your intent is to eventually cover the trade.
There you go.
So you're naked, and then you cover yourself up.
All sort of dated reference. Yes, that is a use case for a fig leaf. So maybe
he actually, if you got his book, he's actually got a picture of a guy covering himself with a fig leaf.
Oh, well, there you go. Maybe that is what. That makes about as much sense as some of the other definitions I've heard from that.
And I am not done.
Oh, you got more?
I do. You always make fun of me.
Yeah, I allot you like 3 minutes.
No, I got 36 more minutes of stuff. This is how I don't lose on the crystal ball.
I like you on sabbatical. This is good. More of this.
The bull put spread. There was one that occurred on Thursday that I did find kind of interesting. Somebody sold the August 2nd 12.5 puts for $201. They paid 76 cents for the 11 puts, taking in $1.25 credit. This trade does okay if held to expiration if VIX is above 11.25. The risk of this is VIX below 11, 25 cents. So kind of a bullish trade that, if you don't get the move out of VIX, well, you lose 25 cents. And then finally today, there's been somebody sold the July 26th 10 strike puts for a nickel.
Maybe he's friends with the 18 strike the guy sold for a nickel?
Yeah,
so
maybe that's their
guy.
strangle.
Yeah, he's legging into a strangle. What could go wrong?
Somebody bought. Well, what could go wrong? Somebody else bought the next Wednesday 11 strike calls, the July 26th for 35 cents, and. Oh, I'm trying to read my writing here. It says sell and then a word that starts with T. I meant to say somebody sold a ton of the August 2nd 17 calls and took in a dime. So people being very strategic, people, picking up nickels and dimes in front of a really large steamroller, so big that you couldn't use it on Wells or Van Buren because it wouldn't fit under the L.
I got to admit, I'm looking at some of your tweets here while you're talking. Winter is coming. people tweeting of buying the VIX. Oh, geez, Russell just destroying the studio. He hasn't even had any adult beverages yet, listeners, and he's already destroying the studio. I like that. Winter is coming. People buying VIX calls. Winter is coming. I don't know, Mr. Meatball, do you concur with that? Anything else catching your eyes on weeklies before we move on to the mothership, sir?
Yeah, I just saw these Aug 217s and. Selling those at a dime, how can you lose? The VIX has never been at 17 before, and it's certainly never made a quick move up to 15 from 10 in a day. Oh wait, it did that 2 weeks ago. So there's certainly some risk in dumping that. Maybe you look and go, well, the volatility is 164, but I don't know. I mean, is this guy definitely a seller? Or that's hard for me to fathom that somebody would want to dump those.
Dump a lump. Yeah, they were.
Wow.
I know.
That's
and don't call your guy because they'll lie to you.
All right, I won't.
We've already established that. All those brokers are all naught but liars. I think I have a title for the episode. Winter is coming. I like that. I'm sure HBO and others won't frown upon that at all. Moving on to the mothership, the big VIX options. They were actually lighting it up this week as well. Several days with an M on them out there this week. As to be expected, some options coming off the table on Wednesday. This is going to be an active day. Going into that, probably active, and that's exactly what we saw this week. The ADV hovering right around, was 671. And if I could pull it up right now, my system is going. So there we go. 647 now. So coming off a little bit, which is interesting. Yesterday doing about 882,000. So pretty active week across the board. 1 million on Wednesday, 1.1 million on Tuesday, and about 600K on Monday. So far today, actually lighting it up as well. About 1.4 almost million contracts on the tape. So an active week, all said and done. I think that ADV is going to be popping a little bit. Open interest, about 3.9 to 1 calls over puts. So you can't see Russell right now, listeners, but I can. And he's sweating profusely because whenever it pops over 3, as he told us before, he starts to get really, really nervous. If those of you who like to go in depth on those kind of call put things, we saw Wednesday about 768,000 of the calls going up. Pretty active, but it's not the record. Actually, the record for just call activity is about 1.5 million on April 19th of all days. So interesting stuff for those of you who put a lot of stock in that VIX call to put. In terms of what is active, what was lighting it up this week, the hot VIX strikes, number one with a bullet, the Aug 20s. Not surprising, it's all Aug on the board this week. 346,000 of the Aug 20s taking the number one spot. Number 2 and number 3, our old friend, the Aug 3035. Talked about that a lot last week. Someone picking up that vertical, got into a whole interesting debate about margin or fees associated with that type of trade. Maybe we'll get into that again a little bit later if there's time. Aug 30s, number 2, 326,000. Number 3, the Aug 35 is right on his heels, 322,000. Number 4, the comparatively reasonable Aug 15s, 231,000 contracts. Number 5, the Aug 25s, the 213,000. Number 6, the Aug 21, so we're getting back down into the 20s again, 193,000. Then we drop off a bit for number 7, the Aug 16s, only 160,000 contracts open. Number 7, the Aug 17s, nice little Aug call strip. I don't see any puts on the list this week. Aug 157. Number 9, the Aug 18s, 154, and rounded out the top 10. The ever popular Aug 26 is about $1.50 and a little change extra there. About 7.3 million contracts open, about 1.5 on the puts, and about 5.8 on the calls. And Mark, I know you've been chomping at the bit all show to get into it. Just out of curiosity, I'm just curious if you happen to have seen any interesting VIX options activity, perhaps even going up today. Did anything come across your radar you thought was worthy of discussion, sir?
I've seen a huge amount of VIX activity this week. Puts and calls, in the money stuff, out of the money stuff. Let's start with July 18th. So earlier in the week, we had a customer buy the Aug SEP 18 put spread for 80 cents. That's a really big, weird trade.
That's a weird one.
Yeah, we saw a customer. This was kind of just straight up bought 53,000 of the Aug 11 puts, paying 48 cents earlier in the week. the 1730 call spread in August. We've seen this one was kind of unique. A trader did where is that trade? I'll find it in a second here. They did a Aug SEP 1 by 1.5 that went up. There's call flies going up. You name it. It's been active today. Lots and lots and lots of stuff has been trading. Lots of spreads. Traders buying like the 12s and 13s to sell the 17, 18s. But obviously there's one kind of behemoth trade, and that went up today around, I'm going to say a little after 11 o'clock, a little before 11 o'clock Central, 12 Eastern. And it was an overseas customer originating in Europe through BGC. They bought 1 October 15. They sell 1 October 12 put, and they sell 2 October 25 calls. They collected 20 cents on the trade. They did that 262,000 times. It was done naked, so there was no futures tie. The crowd took down 40% of it. The balance was picked up by Nomura and Morgan Stanley. So they had committed. They were willing to take that. It was committed. They were willing to take as much as they could, or as much as they wanted. But they gave up the crowd a good 40% to take this off. So this is a hedging trade over something that's originating out of Europe, probably a variance play or some sort of bond or credit play. But that was the big mama of the week, and I guess it points toward the ye old put sale versus back spread is maybe getting back in vogue. But keep your eye on that trade.
Yeah, we were just talking about that last week. How it's not really prime time, or wasn't really prime time. It's been a while since we've seen a lot of those size 1x2s really going up. And even though they were so frequent for a while there earlier this year, late last year, where we kind of just stopped talking about them because there was just like another day, another VIX short 1, long 2 spread going up in some sort of ratio therein. So to see that coming back with such size, I don't know, Mark. You think this is maybe waving the red cape at the bull there? Is it open season on the VIX ratio verticals again?
I mean, if I was a customer, you'd be a fool not to put that on. This is with things this low and with futures, I mean, the Aug future is 13.5. This customer's got a pretty decent amount of delta going into the trade. And if VIX really does take off, he'll be fine. But, at onset, the delta of the 12 puts is, I mean, he got paid for this. So he got the delta of the puts is 27. The delta of the calls is about a 46, and then he only sold about 30 deltas. So this is absolutely a long delta trade. So unless we get some sort of crazy gap higher, this is a completely manageable delta in the way he has done it. I don't know that I would do that naked, but you throw in that Aug put sale, now you're looking at something that is really going to act like a future all the way out to about 16, 17, 18.
I don't know, Mr. Rose. We were joking earlier, but we got people doing effectively futures replacements in the underlying. We got people coming in, buying loads of upside. I got people doing size 1x2s again. I don't know. Maybe you were onto something. Maybe winter is indeed coming. Have you seen a White Walker north of the wall recently, sir?
What was the guy that got murdered at the beginning? It's been a week.
Ned Stark.
No, not Ned Stark. The one at
this season, Walter Frey.
Walter.
I'm revealing my Game of Thrones knowledge.
Arya said,
embarrassing as it may be.
Winter is here.
There you go. So
they just don't know it yet.
Just don't know it yet. They don't know the walkers are coming. But it does. It's been a while since we've seen this degree of positioning. For a long time, we were talking. Things downside. People were loading up on VIX puts, which is a rare thing in and of itself, and that was kind of the trade du jour. And now it does seem like there is a bit of a narrative. Who knows? Maybe the much talked about, much maligned volatility feedback loop. Maybe it's finally coming to an end, sir. What do you think? Are they poised for the big correction here?
The chickens are coming home to roost. All I'm doing is just quoting old stuff today.
You're full of cliches.
I'm full of cliches. But in all seriousness, that we're experiencing record VIX volumes this year in a very low volatility environment, and that has been occurring really from short vol trades, which have worked very well this year. But I think now things are so cheap. If you're starting to look out September, October, November, you're starting to look at how long in the tooth the bull market in stocks is, and you know that we are at very historic lows in volatility. It's you know, protection is on sale. You know, it's a sale at Allstate.
And we also got that guy willing to get short that 18 put in that July VIX.
And there are people
that 18 put spread. That's another funky one. I didn't even get a chance to get to mention that one.
Yeah. There are traders out there that have never seen the volatility spike, and the ones that haven't seen the volatility spike are like, hey, let's just keep harvesting that volatility risk premium, regardless of how little it is relative to, again, what the three of us know is what can happen. And it's another generation. And when we're talking about generations in the trading world, I'm talking about like every 5 years. It's another generation that's might learn some lessons.
Yeah, generations a little bit shorter in the trading world. Not talking 10 or 20 years. Talking, 3 to 5, or depending on the product, if it's a weekly, maybe 3 to 6 months. But yeah, interesting stuff nonetheless. Think of the things that are happening this week. Mr. Rhodes, I know you're a big fan of all things earnings. And we are seeing a little bit of earnings action again, which is kind of fun. We saw some big names popping off after the bell, before the bell, all over the place this week. Let's start going back earlier in the week. If you want to look for vol, even in these environments of anemic VIX, you can look at some nice juicy single names, and there's always a few that will deliver. You got your Teslas, you got your Netflixes, and a few others. And Netflix popping off earlier this week, and we asked our listeners, a weird time when our listeners got it wrong. We asked our listeners, hey, they closed just shy of 162 going into the announcement. They were pricing in about a $13 straddle, right around 8%. And we asked you guys, we said, hey, what do you think about that $13? Too cheap, too expensive, just right, what do you want to do? And about a third said way too expensive. They didn't want to touch it. Another third said they're going to sit this one out. So roughly 2/3 kind of washing their hands of it. 20% saying just right, and only 12% saying it was too cheap. That turned out to be the winner chicken dinner on this one, because this thing kind of took off and never looked back. In the after hours, it got pretty high. It opened up the next morning up a little bit north of that straddle, about 14.5 or so, and then traded up as high as about $23 intraday. So it took off quite a bit. So good time for premium sellers, at least premium buyers, I should say, earlier in the week. Later in the week, we had eBay and Microsoft and a few others. Others which maybe weren't as beneficial to, in fact, Softy trading a whopping 40 cents off of where it closed. They're pricing in about 3.5%, or about $2.65. For a long time, Microsoft, the most reliable premium sell in the business going into earnings. The last year and a half, they kind of flipped that script. They've been actually moving a little bit. This time, it seems like they're back to the old script where they're kind of just settling out. So if you sold that one, you're looking all right. eBay was the one everyone in our poll was saying they might want to sell. That was fairly juicy. That was about 7% that they were pricing in.
Pretty smart.
About $2.60 straddle, and as of right now, it's off about not even a buck, about 80 odd cents. So nowhere 7. So it seems like earlier in the week, Mr. Dr. VIX, one day we had premium buying was the order of the day, and now flipping the script, time to sell some juice. Is that what you're seeing out there? And I know you love watching earnings. What else is catching your eye out there?
Well, we had like a quarter of the S&P 500 report, I think, Thursday. And the lack of volatility, it's mixed. You know, I guess that's what I was, in a very roundabout way, I was trying to lead up to. The reactions have been very mixed. We've got a quarter of the stocks that have weeklies reporting next week. We got like 75 of them. So hopefully we'll have a little bit more, activity to talk about. It's just, when we circle back to what we started out with today, which is, VIX is low, and it's low because the realized volatility in the stock market has been low. Well, lo and behold, the stock market is made up of stocks. I actually got Mark to laugh over here.
You're full of the wisdom today, sir.
But the
cliches are all over the place.
The stock market is made up of individual stocks, and the individual stock implied volatility or realized volatility, with the only area we're talking about that with individual stocks this year has been when we had a little bit of a hiccup in the FANG stocks after Goldman Sachs said something. But otherwise, we really haven't, had even on an individual name basis much to talk about.
Yeah, go figure. Stocks make up the stock market. But good thing I wasn't drinking in that one, sir. It could have ended poorly for all involved. Mr. Meatball, same question for you. I know this is kind of the time of year, I think, when the hardcores over there in the pitch chat really probably get rolling. Earnings season, a lot of grist for the mill there. I'm sure they love themselves a little bit of Widowmaker, maybe a few others. Softy, I think, is probably on there. I know it's on Rock Lobster's radar, probably on some of your mentees' radar as well. What was lighting it up in the pitch chat this week, sir?
I spent a lot of time looking at IBM, which has been a continued disaster, and GE is just an absolute mess. Although GE looks like a kind of an interesting put spread sale, IBM, one thing I think I always pay attention to is when a stock gets absolutely murdered, and the volatility just goes on a death spiral, just goes lower and lower and lower. IBM continues to show that pattern. I think it's got another couple of bucks. Next week I'm watching Amazon. It's had such a nice run up. You got to think there's going to be some sort of pre-earnings profit taking. So I wouldn't be surprised to see that make a run back to 1,000 ahead of earnings. A lot of names, a lot of the big tech names, the GAF names, that your Amazons, your Apples, your Googles, they're all coming up in the next week to 8-10 days. And that's going to keep things interesting here for the time being.
Speaking of keeping things interesting, let's do just that on the show. Let's dive right on into some of your questions. It's time for the Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. Like the man said, this is the portion of the show where we break down what you guys have on your mind. Every once in a while, we ask you a question as well. So looking here, I like this little nugget here, Russell. Optimistic Patriot. They tweeted in saying, I wasn't aware the VIX could go up. I like that. It just struck my funny bone for some reason. I don't know why. I like that one. We asked you guys, I mentioned the one about Netflix. You guys, unfortunately, not knocking out of the park on that one. Let's see what we finished. The end votes were for. We asked you yesterday. We said Microsoft Straddle was 3.5%. eBay Straddle was 7%. What do you want to do with that? You want to buy the Softy Straddle? You want to buy the eBay Straddle, or do you want to sell one of those bad boys? And if I could scroll faster, I could find the results for you, listeners. But yes, it was looking pretty interesting getting into there, and now all of a sudden, my Twitter is not playing ball with me. But let's just see really quick. We'll move on to another question, then I'll see if I could find it later on for us. Let's move on to some of your cues here. We've got, let's see. What do we got here? Our old friend FContangotrader writing in again says, when you buy a put calendar in VXX and, I think he meant take delivery of the stock, a lot of typos in here, it becomes a synthetic call. Great way to gain cheap deltas while you are short. Mr. Meatball, you like yourselves some VXX. You like his put calendar idea we see? Someone clearly likes to put calendars in VIX, not VXX, but what are you thinking about some calendars in good old VXX, sir?
I mean, those make sense. They can be some. I mean, I'm a big fan of calendars in that when vol's low, and that they're just a great way to acquire cheap, inexpensive delta, as the customer said, or as the writer said. So I do not disagree at all. I think you have to watch when vol's really high, putting those types of trades on, because you'll get yourself some trouble. But while VVIX and all the vol complex is experiencing this low implied volatility, why not?
Mr. Winter is coming. What say you to the notion of buying put calendars in VXX to get some cheap deltas while you are short?
Oh, I think it's an excellent way to go about playing that one. I'm not allowed to talk about my own trading, but I may have dabbled in such a thing in the past myself. You can also combine that up with buying one of the short ones. You know what I mean? Because typically people aren't allowed to sell options without having something covered. But if you're doing the calendars like that, you can actually combine it.
So with like an XIV instead?
Yep. I'm a bigger SVXY fan than XIV, and that's just because they trade options on it.
That shows how much the vol space has evolved. There's a flavor for just about everybody out there. You got your flavor if you want it out there, which is nice. It shows a mature category.
You can trade options on SVXY. You can't on XIV.
That's true.
That's really the only
that would
reason.
Make it difficult. Make it difficult to do the old put calendar.
Exactly. Well, no, but you could own XIV and do that with VXX. So there.
I did find the results here of our earnings straddle debate. We asked you guys Microsoft and eBay. Microsoft 3.5%, eBay 7%. What do you guys want to do on that? We gave you only a short amount of time, only a few hours before the number popped out, so you had no after the fact trading, if you will. And 41% saying they wanted to buy that Microsoft straddle. So maybe perhaps hoping a little pass was prologue there, and hoping Microsoft would blow the doors off. As we saw earlier, not so much. 28% wanted to buy. So a lot of premium buyers out there, which is I thought our audience leaned a little more dark side than that. We'll take it. This is the second or third poll we've done in a row that's leaned heavily premium buying, which is kind of, especially that eBay straddle. That was pretty hefty. 21% wanted to sell the Softy straddle. Only 10% wanted to sell the eBay straddle. That seemed to be the winner of the two. But interesting stuff nonetheless. We got people want to update Mr. Rhodes, including our friend Mr. Schwartz. I'm not sure if he's in the chat room today, but he was asking last week, and Avery Tompkins who asked before, and others. They want to know, is there an update on your VIX calculation spreadsheet? Remember you said you're going to put VIX, I believe, get it down to 0 and up so we can get those theoretical highs and lows in finally for VIX.
It's hung up in compliance right now at CBOE.
So it's done, it's just being reviewed.
It's being reviewed, yes. I shouldn't say hung up in compliance. I should, especially because they're probably listening.
What fun is it if it's not reviewed first? Just put it out there live, and we'll all review it collectively together, sir. That's the way it should be. Let's see. We got a pretty active, lengthy one. I'm not sure if you have time for that one. We got another one. People asking us, what's our take on this article saying stop calling VIX the fear index? I think we've joked about that. Oh no!
What?
Russell just jumped out of his chair. What? I guess we'll read this one then. This comes from Ballin. He or she wants to know. Russell's losing it over here. I'm going to mute your mic while you lose it, sir. What's your take on this article? And he says it links to an article called Time to Stop Calling VIX the Fear Index. And it has a bunch of the issues you might think, some excerpts here. Let's see, VIX broke 10. The past time it did that was 2007. You know what happened next? There are two obvious problems with this line of thinking. Tiny sample sets, or they allude to the small sample set we have of actual VIX data points, which is a credible point. We had the mid-2000s, early 90s, and now there's simply not a whole lot of recent examples when the VIX was that low. The second is the overemphasis on 2007. So they go on that thing. None of that really says why it shouldn't be called the fear index, aside from the fact that it's a pretty cool moniker, and it seems to have stuck, sir.
I love the moniker the fear index because it actually matches. Has there been any fear this year?
That's true.
Has there been any fear this year?
That's the weird thing. There has been some macro fear, shall we say. Whenever North Korea launches a nuke or so, or not a nuke, but a missile, there's some fear.
Has the stock market reacted to anything, not the individual stocks, but the stock market reacted to anything like it's afraid?
In brief glimpses, and then it kind of got crushed away by all the grandmothers in Iowa selling vol.
And in those brief glimpses, the fear index popped up. And then, just like a whack-a-mole, got knocked right back down. Eventually, the whack of VIX machine is going to get stuck, and nobody's going to be able to push it back down.
I think you just want to answer this question because you like the handle. You like balling.
I do.
That gets a point from Dr. VIX. All right, there's another. We got time for a quick one. Let's do a quick one here. This is M Mouse sent in this chart a while ago. We haven't had a chance to get to it. Just a performance of short vol versus U.S. equity throughout all of 2016, and they say effectively, check out this chart. Short vol for the win. Why would you ever buy VIX? Well, that was a pretty good, compelling argument. But as we've seen this episode, winter perhaps may be coming. And in which case, a lot of people are positioning for something to happen out there, which is kind of interesting. I don't know, Mr. Meatball, A, are you a Game of Thrones fan? And B, what do you think of the notion that winter perhaps may be afoot?
I am a Game of Thrones fan, of course. I'm a nerd. How could I not be? Well, here's what I was saying. I would say I'd be a little nervous, except for Kid Rock announced he's running for Senate on Monday.
That makes me more nervous.
now I feel fully confident that the world is going to be fine and safe, and we have nothing to fear but ba with the ba, bang da dang, diddy, but itself.
Yes, easy for you to say, sir. So there you go, Mr. M. Mouse. I think we've talked about this before. We have our feelings are well known. It has been worked out fairly well, but not an insignificant number of people, and certainly not an insignificant number of contracts at the very least, are at the very least hedging against something else happening out there. So who knows? Keep an eye out for some White Walkers in the distance. As we move on into our final segment, it's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. Welcome to the crystal ball, the portion of the show where we embarrass ourselves mightily in an attempt to entertain you and perhaps inform you a little bit too. This is, of course, where we try to guess what the heck VIX is going to be doing. VIX Cash. Not the futures, not VXX, not anything else, just ye old VIX Cash. And as we're closing out the show here, it's right around 975, 974, right in that range. So that actually puts it where I believe we had Ophir on the show last week, and he actually almost hit it. It's actually 975 on my screen right now as we're talking this. So he actually guessed 975. Some of the first spot-ons we've actually had in quite some time. So Ophir gets to go first. Unfortunately, he is not here. So Mr. Rose, since you missed it last week, I'll give you the pride of place. Your ghost, by the way, was not feeling this sell-off at all. He thought winter had already arrived. He picked 13.74. So he was a little aggressive on the upside. I don't know if maybe you want to fade yourself from last week or what are you feeling a little bit there, sir?
I'm going to go with 976.
I guess when it works, right? Why mess with it?
I'm going to start doing exactly wherever we are at the moment.
And Mr. it hasn't worked out too poorly, so you can't really. I think Meatball's done that for the last month, and it kind of worked out. Speaking of Meatball, your cohort, Mr. Rock Lobster, guessed 9.99. So I will give you, Mark, the pride of his second place by letting you go second. So what are you feeling? And don't say 10.05.
All right, I 10.05. Why would I say 10.05? Just because I've guessed that the last couple of times. All right, I'm gonna go crazy. Let me see here. I actually think we could have a slightly higher VIX next week. I don't know what's going on. Not by a lot, but my gut says we come in on Monday and Tuesday, and maybe we do stay above 10. So I'm gonna go crazy, and I'm gonna say 10.04.
There we go. So far out of the realm of possibility for you. I actually put you down as a guest, Russ. I should probably put you down under your own name instead. And I got to start getting closer so I can go first instead, because now you guys taking up all the fun prints in the room. I'm not feeling way too much higher than that. So my choices really are like 9.5 range or 10.25 and north of there. I'm gonna go, since of course the winter is coming, so maybe I will. If I was gonna go 9.55, I might flip that. I might say 10. I'm gonna go 10.25 instead, because I'm not feeling a lot of love. I think a little bit higher could work. And if the White Walkers are coming, I want to have a little bit of upside. So a nice, interestingly tight range this week, which is always fun here on the old Volatility Views program. That's what I was looking for. That's the theme music, listeners, which means we've come to the end of an epic journey through the world of volatility, how epic it was. We talked all things, people looking for some upside maybe in yield VIX Cash in the near future. A lot of different ways they're doing that. The old 1x2 is back, buying in the money calls. Haven't seen that too often. In the money put spreads going up as well. Time spreads, I should say, for puts and all kinds of other funky stuff going up out there. Maybe at least make you scratch your head and say maybe, perhaps, this era of epic stillness is at an end. We shall see. Meanwhile, though, let's go wrap around the horn, see what's cooking. Let's start in order of proximity. Mr. Rhodes, you are to my immediate left.
I am.
What is cooking with you? I know you're working on a lot of fun research while you're on sabbatical there. What are you up to these days? And how's your spreadsheet coming?
You know how really how extremely wealthy guys will take a couple of weeks off every year and go out to the desert and smoke peyote and everything? Well, my version of that is going to New York next week for a Santa Fe Institute short course on networks and big data. Biologists, botanists, physicists, all talking about how they apply big data to complex systems, and I'm going to see if I can take what they talk about and apply it to VIX.
Interesting.
That's my vacation.
Big data. Your idea of a vacation and mine are somewhat different. I thought you'd be going north to see if you could spot those east winds blowing. All right, and last but not least, Mr. Meatball, what's cooking in the land of Option Pit and Carmen Line?
Week from Saturday, we got our Straddle, Strangles, Long Gamma, and VXX and UVXY course. Go to optionpit.com/long gamma. We're going to be talking about basically how to own premium and then use the ETPs and a little bit of VIX to hedge off a lot of the risk of carrying premium.
There you go. Check it out. Long Gamma. Head on over optionpit.com to learn more. And on behalf of the Meatball and one day Dr. VIX and indeed myself, thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show. If you like all things commodity vol, stay tuned in a little bit for TWIFO. We'll be breaking all that down right about 1:30 Central. So if you're in the chat, stay tuned. We got some ONRs coming your way. And then we'll be back here in about half an hour to talk all things oil and gold and you name it, all the surprise products out there in the world of commodities. And we'll see you on this show next time right here for more Volatility Views.
Volatility Views is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's blog gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/blogs today to sign up for regular updates via email.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.